The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 13th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 281 points. She's trading at 18,044. S&P off 37 points, trading at 2121. NASDAQ Composite down 78 points at 5133. Russell is off 29 points. She's trading at 1206. The DAX closed down 45 points. The FTSE down 35. Gold is off a buck. Pretty much flat, right? 1324 is what it's trading at. Silver flat as well, trading out at 1890. Light sweet crude back a $1.21, trading at 4507. Lead the charge here to the upside. Are there any stocks? It looks like all ETFs. Apple is the only stock. I think it's only Apple. Let's see here. Everything else is Liberty Media. I take that back. Liberty Media Corp. That's up $4, about 17%. Otherwise, on my screen of my top 20 point gainers out here, it's all the ETFs. To the downside, you've got Priceline. Dollar-wise, that's off $28, about 2%. Google's off 1 6/10%, $13. Intuitive Surgical, a little less than 2%, or about $11. Boston Beer, Sam Adams, off nearly 6% here, down about $10. So, okay, let's go. The first question, feel free to send me an email, steve@tfn.com. Obviously, a post inside the Tiger's Den, and I promise to get to everything that is requested. But with regard to what is the market doing right here, right now, what is it that Stevie is watching? And what I'm watching for is really inside the NQ. If we take a look at the 30-minute chart here for the NQ, this 30-minute chart we're looking at, we're in the bar right now that began at 1 o'clock. This bar does not close until 1:30. And I speak of bars, you know, this is a bar that's open 24 hours a day. You can always get a drink served here at this bar. But when we take a look at the actual candle bar out here, we really won't know what kind of candle it is until we get to that 1:30 time frame. But here's what we do know right now. If we take a look at the high, let me get my crosshair out here. If we take a look at the high that came in at 4 o'clock yesterday afternoon, again, this is the NQ. It's the futures contract that we're looking at, 30-minute chart out here. We can see that we are in wave 7 on the way down. Just simply counting the Chapman wave counts to the downside. And we know, both you and I know, that we must respect that 7th wave. Does it work all the time? No. And this can extend, right? We get a lower low between 1:30 and 2. That's always possible. Then the wave just simply continues. But we're getting close to where we're going to get a signal or a piece of information out here. Now, we've got an A to B equals CD to the downside. That's what you're looking at, that little lightning bolt pattern that started from the A point, which was the 4 o'clock high, I should say, which was right around the 47.72 mark. It wasn't even just around it. It was at 47.72. Makes a retracement into about 5 o'clock this morning. down at about the 47.32 level, then makes about a 0.618. It was really 58.1%, but close enough as we came into the open this morning into the 10 o'clock time frame up at 47.55. Then the market proceeded to continue moving down. So we've got a 1 to 1.272 A to B equals CD. As I take a look at the lightning bolt pattern out here on a 30-minute chart. By the way, what is setting up as we speak right now is a potential for a Gartley buy. For those of you that like the Gartley patterns out here, well, that is really what is in play as we speak. Now, what you need to see in order for this pattern to complete, you need to see some type of bullish reversal signal. May happen as we get into that 130 bar. You would then need to see a move higher for some type of confirmation, and then you would need to see a price close above its oscillator and change line. Right now marked at 47.21. We want to pay attention to the NQ, and the reason that we want to pay attention to the NQ is because, still it is the strong dog out here, just a strong link. If we go and take a look at the daily chart, so we're going from a 30-minute equity futures contract into the daily out here. Let's go see what kind of message we have from the daily, because daily is going to trump the 30-minute chart big time. Here's what we can see. So far in the daily chart, as we got down to the low during this half-hour session, this is today, we're looking at a daily session, price got down to or near the bottom of its weekly TAS market profile. That price point that we also want to pay attention to is going to be the 46.95 level. We haven't gotten down there yet. We've been down to 46.99, so it's really close enough, close but no cigar here. If the market is going to careen to the downside, say that seventh wave pattern just simply fails out here, once it does set up, we're not there just yet, then what you're looking for is, I would say you're looking for a close below that 46.95 level, but that's really not the case, is it? We've seen how that level failed on Friday. Then on Sunday and Monday through yesterday, we saw that big reversal out here, made about a 0.618 retracement. And we'll go take a look at a 30-minute chart, see where we're at retracement-wise there from the low to the high of yesterday at about 4 o'clock. So, you really need to see on a daily basis, you need to see a close below yesterday's low. That's the key low out here. 46.29 is the number. Now, going back to the 30-minute charts out here, let me come over here. Let's go ahead and put the NQ back up on our screen. Let's take a look at, because what's interesting here on the 30-minute chart, one of the things we'll see, we had a caller yesterday afternoon when I filled in for Tom during the 3 to 4 o'clock hour. And as was pointed out, was the retracement was at or near the 0.618 retracement from the high to the low out here Sunday. You can see it was just above it. 47.59 would have been the number. So it makes a 0.618 retracement. We use these like Jack Sparrow, right, as guidelines. Or maybe it was Barbosa. He was one that used them as guidelines. But now that was from the high to the low. Now we're going to go from the low here Sunday evening to the high yesterday afternoon. Just see what kind of retracement it is that we've got going on. Because remember, folks, this is a trader's paradise market that we've been in here for a couple of year and a half or so. And so why would you think that today would be any different? You shouldn't. Just to put this in perspective, let's say that A to B equals CD holds. Let's say that that seventh wave holds, meaning that we see this bounce higher out here. Do you realize the NQ has not even made the 0.618 retracement from yesterday's low? With the market looking so ugly dollar-wise, 267 points to the downside. I guess the point is the NQ could actually be forming an A to B equals CD to the upside out here. We'll have more information in about 16 minutes, but stay with us through this commercial. We'll be right back. We'll go take a look at oil, gold, ETFs, anything you'd like. Just give us a call, 877-927-6648. My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price price relative strength divergence pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 230. S&P is down 29 points right now. So for Dano in the den out here, I believe he wanted me to take a look at GDX and gold. So let's first start off by taking a look at Goldilocks, see what it is doing out here. And just really picking up from the chart from yesterday, it's not doing a whole heck of a lot, right? If we go take a look at, so when I say not doing a whole heck of a lot, one of the things that we know is the following. In fact, we'll take a look at the rising. I'm glad that this was brought up because we want to take a look at the rising price channels in the Wilshire 5000, in the Dow as well, because price as it was coming down here as we were coming on the show, I believe was really testing that level of support, right? If you break a trend, the trend is no longer your friend. So the first thing that we would say about gold here is coming off of and this is the December contract that we're taking a look at. If you come off the low out here from December 17th, and I just use that as a touch point, and then I use this session from May 31st as a touch point, you've got a diagonal line on our screen, and so we know that gold is still in an uptrend. There's no denying it. Now, we have been trading sideways inside gold. In essence, you'd have to say since that move on June 24th out here. So it's been in a trading range, and if the market breaks below that, because you're looking at a put position out here, right, Dano? I think that's who had requested it. So we're going to actually look where's the best place for this to be sold. So we don't have a break of the trend line out here. So that's the first thing that we wanted to take a look at. The next thing that we want to look at is let's go take a look at our sideways horizontal levels of support and resistance utilizing our TAS market profiles. To me, that seems to be the next best thing for us to look at. So an aggressive trader would say, okay, you know what? I think price is going to head down and go test the bottom of that rising price channel. in which case we would say, all right, so your back is up against the wall with regard to the daily profile, the brand new, well, it's not brand new, it's been around for 5, 6, 7 trading sessions. The level that you want to sell from, and we're not that far away from it, is 1333. Right, 1333 is the top of your TAS box out here. Yesterday, price got below it. Today, it tried to get above it. So far, it's rejected it. You're really sitting at the weekly TAS point of control out here. So it's a comfort level for both buyers and sellers out here. But for an aggressive trader, you can sell it now. You would close it out if you were to see price close above 1333.80 to be specific, because you'd say, shoot, that says that gold could run up to 1366. So if you're looking for the ideal place to be able to sell gold, it would really be that 1366 level. Now, here's the deal. If you were to take that trade with volatility up as the way, and we'll talk about volatility for sure with the, your put count, you may be paying a lot of premium for a move between 1333 and 1309. So I don't know if the reward risk is out there for you, but you'd have to certainly look at that 1309-ish area as being your target to the downside. You break that, and really would be breaking 1295, right? We're not going to use a trend line. We would use the TAS market profile weekly level of 1295. You've got to anticipate between 1295 and 1309 that there is some pretty strong support. You break that, then we've got a whole lot more to talk about to the downside inside of Goldilocks. So I think that is the first best place for you to go ahead and take a look at what is going on inside gold. With regard to the GDX specifically, right, we know that it acts similarly, but not exactly the same at all points in time. So we'll take a look at the GDX, and here what you would be looking for. Here's what you know about the GDX. Well, we'll know about it when I turn on the volume. Well, it's actually on. I just have to do that click. Here's what we know about the GDX most recently. The swing point that you want to pay attention to is September 1st. There were 131 million shares there. That swing point goes from a low of 25.17 to a high of 26.47. We're trading inside it right now. This is the GDX. When I say we, I'm referring to the GDX, obviously. And today, you've done volume of 40 million shares. 40 million versus 131. I don't need to do any straight line math. I can tell you the GDX does not have the push lower with regard to volume out here. So this says, hey, we continue to bounce around. And basically what you would want to do is you would want to go ahead and take a look at, if you're taking a look at some type of put position here, you'd want to see a bounce. And I would say the ideal, of course, you guys know where I'm getting that from, right? That's from the scene from My Cousin Vinny. Right, the guy who, the Michelin XR 470. I don't remember the exact, line from that, but those of you that know the movie know what I'm talking about when I say ideal. Of course, I don't think he said ideal, right? He didn't. It was just taking that whole, that whole scene, but applying it to technical analysis out here. But here's what I would say: you're moving down into a swing point with light volume, so it doesn't look like you've got the ability to bust it to the downside. Instead, what you want to do is say, hey, where was real resistance here in the GDX? And that's what I want to give you. And that's the price point of 28.71. 28.71 is the number. That's right, Dan. It was identical. That's right. You got to like what that truly has got to be one of the classic movies out there. At least classic movies I still watch scenes in that movie and just laugh, even though it's coming. That is good humor, right? I'm not talking about the kind of good humor, that the good humor truck although there's nothing wrong with that good humor either. Well, except that it doesn't do a whole lot to help you shed pounds out there. Okay, so that's the gold. That's the GDX. I hope that assists you in your trading. You got 124. So we're going to wait for this 6-minute session to complete. If we come back from the next commercial break, we'll take a look at that Gartley buy pattern out there and then take a look at what its outcomes are with regard to any bounce that may be going on in the marketplace, or who knows what other pattern could actually unfold. So what else do we want to at light sweet crude? We ought to look at light sweet crude, see what it's doing, trading down at 45.17 right now. Really not doing a whole heck of a lot. I see the blurbs that come out on CNBC talking about the market is moving lower because of energy. I specifically think they're talking about light sweet crude out here. And I'm just kind of like, hello? All light sweet crude has done thus far, folks, it's not giving us any kind of signal whatsoever. The signal it's given us is it's gone down, tested support, and it has rejected support thus far. What do I mean by that? Again, just take a look at that TAS market profile, 44.85. That's the number. Tested it yesterday, rejected it. Tested it again today, rejecting it. We don't know if this is an A to B equals CD to the upside or an A to B equals CD to the downside. It could be either. Could be either. And I don't know which one it is out here. Nor do you perhaps know which one it is. So just testing support. However, if we do get below 44.85, then I would say chances are it would be an A to B equals CD to the downside. You may say, well, what the heck does that mean? That would give you a price projection. If you break through a level of support, that would give you a price projection of a move down to about 41.39. That makes all the sense in the world. Why do I say that? Because right at about 41.39, well, you can see you've got your weekly TAS market profile. That's at 41.12 out there. But likewise, folks, I could make the case that where Light Sweet Crude wants to head to is it's got a to B equals CD to the upside that is unfolding here, and that it wants to go back and test its highs at 52.40. However, I'm not willing to wager on either side just yet. We don't have enough information. That's what's going on in light sweet crude Texas tea. I was off 230. S&P is down 29. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we did close the 1:30 session here just a moment ago. You can see we got you got a great reversal signal. So if you're short the market out here, depending on where you're short from, and you still want to maintain that short position, the next level I would suggest that you watch would be 47.41. That's the TAS daily, that's a TAS 30-minute profile out here. And price is going to go up and hit that level. You say, how the heck do you know that, Steve? Well, probability suggests that that's what's going to happen. Why? Number one, we got an A to B equals CD to the downside. Big old bullish engulfing, as you can see, but it's also a key reversal session. So you see, though, when the market is stretched, that's when you want to pay attention to those. That's where the current bar exceeds the high and low of the previous bar. That is where you're in an extended condition, and a lightning bolt pattern qualifies as an extended condition. There's others out there. And you close at least one tick in the opposite direction. Well, shoot, this case here, you took a bullish engulfing candle that wiped out the past 2.5 hours, almost 3 hours of trading out there, and it's 1:30. Folks, the cavalry does not exactly give you larger messages than that. Now, the pattern doesn't have to work. I'm just telling you the message of the markets at 1:31 in the afternoon. Now, because of that 30-minute profile, which has a bias to the bullish side, I say that because the point of control is closer to the bottom of the box out there. All you do is just set your eyes, and because price is trading above its oscillator unchanged level, 47.24, it's very likely the price is going to go test 47.41. Does it have to? No. If you're still short, just make sure you're stopping. It's an intraday trade out here. Just make sure that you don't let price get above that level out here. Just as simple as that. Yes, I did say you like to see another session that confirms the pattern, meaning to move higher, and that is true out here. You really do want to do it. Just depends whether you're aggressive, you're conservative, just where you're at. But you've got a nice, by the way, you have a nice Gartley buy pattern inside of the NQ right now, 30-minute Gartley buy pattern. We'll see how that works out. Now, another question that somebody should have asked, and I know somebody out there actually did ask it, and you're busy at work because you got a earpiece in, you want the boss thinking that you're really focused on what you're focusing on, but what you're focusing on is, hey, what are the markets doing out here? And thank you very much for doing that. We appreciate that. We don't want you to get in trouble, though, at work out here. But somebody, I'm sure, is saying, hey, Steve, the VIX index today, right now it's up by a total of 16.95%. 16.95 means a $2.57 move today. And as you know, we saw the VIX index have about a 40% move, one-day rate of change a couple of days ago. That was on That was on Friday. Then on Monday, we saw a VIX have a significant percentage decline to the downside. Today, we're back up to the upside, all above 10, below 10% out here, below negative 10% is what I should say. And so you might be saying, Steve-O, I hear somebody saying that. Have we ever had a 3-day huge VIX move, huge mix to the downside move, huge VIX move to the upside? And the answer is we have. Thank you for asking that question out there. However, it's not as definitive as what you and I would like out here. So, you know, and I don't know where the VIX is going to end up the day out here. Just simply don't. But if it does end above plus 10%, it's just not as definitive. By the way, if you were going to ask that question, well, how many times have we seen in this specific order the VIX jump up by more than 10% on day one? That would be Friday. Then jump down by more than negative 10%, the day two, that was Monday. And then on day three, which would be today, which hasn't closed, we see another move greater than 10%. I would say going back to 1990, how many trading days are there since 1990? You know, I'm glad you asked me that question because I know that off the top of my head. I wish I did know it off the top of my head. But what I do know it is I know it off of the top of my spreadsheet. That much I know. So the number of trading days we've had, 6,970 or so, give or take a day or two. So you got a 7,000 trading sessions. In that 7,000 trading sessions, there's only been 1, 2, 3, 4, 5, 6, 7, 8, 9. Today could be 10. But there's only been 9 times where we've actually seen that scenario play out. The most recent, what the heck is that? The most recent time that we've seen that combination was on June 24th. That's when it culminated, where we had a move lower, greater than 10% in the VIX index. That was June 22nd. Then a move higher on June 23rd. Then a move lower on June 24th. And as I say, of 7,000 trading sessions to have basically 8 of them, there's no probability with regard to that pattern. I mean, we're pattern recognition type specialists. We'd like to believe that we are. If I take a look at the time prior to that, that took place on October 9, 2014. That just went ahead and we saw a move lower out here. So there is no meaning that I can go back to. Now, the VIX index doesn't have a one-day rate of change greater than plus 10% out here. Then we fall back to Friday and Monday's meeting out here, and that's got a bullish connotation to it. It just simply does. So where today's no, and so what does that mean? It really means that regardless that the VIX. So if you want to go back to the VIX out here, you've got to go back to the meaning that has the most meaning. Oh man, that was just horrible with regard to grammar out here. But as long as the VIX is trading above its 50-day exponential moving average, which is 1364, it's a bearish. It's overall, and it's a daily chart, right? Daily tool that we take a look at. It's a bearish message out there. It's really as simple as that. So that answers the question with regard to what the VIX is doing out here. Now, what else do we want to look at? We looked at gold. We looked at light sweet crude bonds. Maybe we should look at bonds out here, right? Because we've got an interesting market for sure. I saw something flash across my screen out here, said that Bill Miller's call, long term, by the way, I know that that's what he was referring to, was he was saying long the S&P and short treasuries. Now, I don't know that he was looking at 30-year treasuries. It might have been 10-year treasuries. But if we take a look at the 30-year, that's what we're going to do out here. Now, there's some thinking for you, right? Because if you believe that if treasuries had lower money flows into the market, okay, I don't know if that's what his thinking is or was, but with regard to the treasuries out here, if I take a look at a 30-year treasury, that certainly shows that it is in a bearish mode out here, right? Here's what we know about the December contract for the treasury bond, 30-year treasury. We can see a declining tops line out here. That's your blue diagonal line. There, it looked like price was going to break above it. Didn't really. It is now trading below it. It's trading below its oscillator and change line out here. So that's got a bearish connotation to it. Running really right back into, we talked about this yesterday, that there was a good chance the price was going to come back and test the bottom of the June 24th area. Hasn't gotten all the way down there, but it looks like that is where it is headed to. We'll see if it finds support there. If it breaks below that level, and right now, there's no reason to believe that it won't. Pattern-wise, there's nothing out here to believe that it won't, right? There is an A to B equals CD to the downside. If we take a look at it, here's what that pattern looks like. Let me see, 173.21, 173. There we go. Yeah, that says you're already below the 1-to-1. No reason for us to not see 163.83 out here. Maybe even lower than that, like 161 and a quarter or so. So and with regard to the S&P, the long-term call, well, we know that on the long-term basis, and I've got to agree, there's unfinished work to be done. The S&P 500 wants to get up into that 2350, 2450 area. It's not going to do it today. And for those that are doubters out here, it's going to happen. It's just a matter of time. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. That was off about 2:20. Let's go out to Sacramento, California, and speak with Kevin. Kevin, thanks for calling. Thanks for holding. How are you doing this morning?
Doing well, Steve. Thanks for taking my call.
Hey, my pleasure. And you want to take a look at Biogen, I believe. Tell us what you're doing, how I can help you.
Well, I tried to be clever. I looked at the biotech stocks, and I thought Biogen was acting pretty strong, so I sold puts. The options that expire this Friday, September 282 puts, and I sold a bunch of those, and I used the proceeds to buy puts on the IBB. Again, thinking that Biogen was the stronger one, and if it went down, Biogen wouldn't go down as much. Of course, I outsmarted myself because Biogen's gone down a lot more than the IBB since that trade. But I'm getting a little bit nervous on the 282s for this Friday. Do you see it getting down there this Friday? By this Friday?
I will say that if we take a look at the daily chart for you, just look at what Biogen is doing. I don't know what was behind. It wasn't an earnings report. The earnings report in Biogen came out on July 21st. And it spiked up, it gapped up. You're right. There was a nice sign of strength. In fact, you could say that, in essence, it was an island bottom that had formed out there. If we take a look, and I'll turn off some of the lines on this chart out here, and I'll put a square around, a rectangle around it, whatever object shape it takes on here. A nice big old island bottom. So if you're looking for an equity that has put in a nice bottoming signal inside of this sector, folks, there's no question that Kevin has nailed it. It's got a very strong bottoming pattern, that island reversal, because this thing had gapped down. Now, gapped down with some pretty big volume on June 7th. I don't know what was behind that move. Maybe that was when the politicians were out there trashing the market. Who knows what? And that was big volume, 8.8 million shares to the downside. But nonetheless, it forms a nice bottoming pattern, goes ahead and gaps up with 5 million shares. And then there's another sign of strength inside this. Wide price spread, accelerated volume, about 8 million shares. This should have, right now it's just coming back to test the level of support out here. And this should have really good support. If I were you, I would be watching the 290.46 level inside this. because you're pulling back into this area with light volume. We've done about 990,000 shares today. That's really going against 3.5 million. That's the low volume day, because that was August 1st out here. The very next trading session you've got is 7.8 million shares. So in the case of that's what the daily chart shows us. And if I just put up a weekly chart, right, we take a look at a little bit longer term time period out here. This thing gapped up with weekly volume of 20.7 million shares. And so far for this week, you're not even, you're about 10% of that. So it's pulling back on a weekly level on light volume, pulling back on a daily level with light volume. If I look at our market profiles, 282 is feasible because it is a level of support. I'm going to switch this back to the daily chart here for you, Kev. And as we take a look at it and the profiles go ahead and populate themselves, there is what I'll call the horizontal hidden level of support value area at 277.50. But it doesn't really help me at this stage here to understand, the timing of when that would occur. If I look at the swing point that was taken on a daily basis to the downside, I'd look at August 25th, which had 1.6 million shares, and it was taken out with 1.9 million shares. So, there is an A to B equals CD pattern. We'll probably see that this will line up price-wise with this TAS market profile. It becomes the 1 to 1.272 area. So in time, it does, and all it would be doing is pulling back to a level of support, forming a Gartley buy pattern out there for you. But I can't, with regard to the timing of this Friday, it's a tough call. You're pulling back on light volume versus the opposite of what you would be looking for. And that's what I see in Biogen. But tell me what else what have I overlooked? Because you've been studying the chart too. Is there something else that you're looking at that was your target for the 282 area? Was it the breakout from July 21st, maybe?
Well, I saw a bunch of support at a number of different levels. Let me go to my charts because listening to you, I think we're off about 20 or 30 seconds on the
the delay, the feed or something. Yeah. Right. What you're seeing, that's in case somebody comes on and swears or something, just so they cut it off the radio. Or
well, with these markets, that's possible.
Yeah.
Well, I was looking at a couple things. The sign of strength on the 2nd of
August.
2nd of August. The gap, I thought, would provide some support. I think very similar to the number that you said, the 290, that 290 area. So I just thought that it would have a tough time getting down there. So those options.
And it may. It absolutely may. When you get inside the gap, which in essence is kind of where it's trading, and just because you and we can now take a look at these market profiles, which are really helpful, in making a decision here. What we know is that the current daily profile, let me do this. I'm going to turn price off on my screen out here, and you're just going to see market profiles. And the blue ones, Kevin, are the daily market profiles. When they start forming at lower levels, they tell us that there's selling pressure. But when they continue to form at lower levels, and we've just seen the most recent one form at a lower level, and prices below that, now I'll turn the price back on, that's not a bullish message, and says that you can continue pulling back with light volume. So real support on this. I know where you're going. I know where you're looking at. Absolutely, you're right about it. But we would have liked to have seen 303.22, hold as a level of support. Biogen, depending on how well it holds up. Now, the sector, it's important for the sector to also, be headed the same direction, even with one of the strong stocks. But it does look like, and you're right, you have nailed this, Biogen looks like this is setting up to be a nice buy out here. I'd like to see it complete a Gartley buy pattern and get down to that 277 type area.
Now that they've got another gap, let me go back to my charts real quick again. They got another gap way back to
July 21st?
Yeah, July 20th to 21st there. Yes. 21st. I know you. I've listened to you many times. I know you say gaps are a sign of strength, but over time they also tend to get filled. Do you see any danger of that getting filled?
Well, there's always danger. Gaps are our friends. Gaps to the upside are a sign of strength out there. I don't. When I see a gap up, I don't say, "Oh, I'm not going to go ahead and not trade that," because at some point in time it's going to be filled, just like gaps to the downside. So instead, I really take things in perspective. What other pattern is in play as we speak? One of the other things a phrase that I like to use is there's nothing more bullish than a failed bearish pattern out here. Well, or there's nothing more bearish than a failed bullish pattern. In this case here, we have a very strong bullish pattern out there. An island reversal that took from the time period of June 7th until that July 21st gap out there. That's a very bullish signal. And you've got signs of strength. That's a bullish signal. And what we would love to see, I would like to see some type of Gartley buy pattern form inside of Biogen without this island bottom being violated. I hear the music. You're welcome to stay on through the break if you'd like.
No, that does it. I appreciate what you do. Appreciate the info.
Thanks a lot, Kevin. That was Kevin in Sacramento. Steve Rhodes with TFNN. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 256. S&P is down 32 points out here. I had a request earlier to take a look at the yen. And if we take this chart here, by the way, takes a look at the U.S. dollar, Japanese yen. That's on the bottom portion of our screen out here, and gold is in the upper portion. And so I'm fairly certain that the request was because of trying to understand what's going on inside the yen, to also figure out what's going on inside of gold. So earlier in the show, we took a look at the rising trend channel, rising trend line inside of gold. I've got the continuous contract. That's in the upper panel. We can also see that same rising trend line in the bottom portion of the chart. Hey, let's go out to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How are you doing this morning?
I'm doing great, Steve. Thanks for sneaking me in before the end of the show. I was hoping you could take a look at EEM. I'm short with have October 38 puts on it, and it looks like we have some volume coming down. Hopefully you can get a quick look at that before the show ends.
No, absolutely, I can. Now, one of the things that we like about the EEM, just in speaking. Now, the problem here is, folks, as I take a look at this stock chart here, I know that many people are going to say, hey, isn't that an island top out here? And technically speaking, it is. Trading session from 9.6, 9.7, and 9.8 out here. So it is. The problem with EEM is you've got the top 10 holdings, I believe, are from, that's the wrong chart out here, are from Korea, from Taiwan, from China. I think that's what makes up the bulk of the top 10 holdings inside of it. So, and so you've got currency valuations going on. And so from that standpoint, I don't really pay as much attention to it. With regard to support levels, though, and volume, absolutely. So what I will put on here for you first, Brent, is just take a look at market profiles. And I apologize, I didn't hear the price point or target price point, but where price should head to is the bottom of its weekly TAS profile, which is between 35.19 and 35.65. Are you targeting something less than that? And I think you said they were October puts you had?
I have October 38. Yeah, I'm looking more for the 34 range, but that's, just have to watch its progression and see how it gets down to that level you just mentioned.
Yeah, so not that, and I don't know, these profiles work really well for virtually all vehicles out here. I would say you want to, so watch the volume. Hey, look, if the volume is coming out of this thing and increasing on the way down, for example, obviously on Friday, not obviously, but Friday you did 124 million shares. Yesterday, 120, basically. Today, you're at about 91. So volume is certainly accelerating to the downside. If volume continues to accelerate, that 35.19 area could easily fail, and then the target really becomes even less than where you were targeted, which was the swing point from June 27th out there, 31.89. But nonetheless, let's respect the market profiles, the weekly market profile, and watch what happens in that 32.83 to 34.08 level is how I would take a look at it.
That sounds good. Thank you very much, Steve, for getting me in there before the end of the show. You have a great one.
My pleasure. And my pleasure. And I know you had called last week, and we got a new system out here, and I did see that you were on the line. So I think we've rectified that. So my apology for not getting to you previously. I'd also watch 37.48 as a price you don't want to see it close above, but I don't think that that's the issue right now.
All right. Take care, Steve.
Okay, you bet. That was Brent in Martinez, California. And for those of you, if I didn't get to what you wanted to look at, my apology out there. We're out of time, but I will be filling in for Tom from 4 to 5 today. So I'll go through the list of anything that I didn't get to and make sure that it is covered during that time period out here. Just as a quick update with regard to that potential Gartley buy pattern that is out here as we come into the 2 o'clock session. Still in play as we speak. But if that seventh wave gets taken out, this is what you want to watch for. That'll be a message to us, for us, 46.99.25. That will have failed. That says lower prices are coming at us during the day. Take care, folks. Stay tuned for David White.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.